Hey, welcome back. Good afternoon, folks. All those people out in YouTube land, wherever you're watching this. Welcome back to another episode of And if you don't know what means, you'll figure it out. It's the end of July. And with the end of July comes August, the beginning of August. What are we going to talk about this month? Well, last month's video, we talked a little bit about how the Florida housing market is showing subtle signs of recovery, and the hypothesis or the bias has been confirmed. It would appear at the moment, unless obviously barring extenuating geopolitical circumstances, at the moment, the housing market in Florida, or Florida Gulf Coast, I should say, is skipping along the bottom, meaning when a market starts to correct, you will see inventory climb, sales decline, contracts decline, days on market grow, and then subsequently, after about 12 to 18 months, you see values fall. Then they continue to fall because inventory continues to climb, sales continue to decline, contracts pending continue to decline. Homes sit on the market for longer and longer because we are stubborn and we have to self-discover that the market's correcting the hard way. Getting slapped upside the head doesn't work, unfortunately. If it did, make our jobs a lot easier. And after all of those, the perfect storm, that's what we'll call it. After that perfect storm ensues, proverbially speaking, you start to see a peter out effect of the decline of the market. How does that happen, Matthew? Well, eventually you see inventory stop climbing and you see a slight uptick in sales and contracts. And then subsequently, you start to see days on market decline ever so slightly. The trend is your friend. This pattern continues for a period of time. And then that's what you would call we're skipping along the bottom. We may have found bottom. And the reason why we say we're skipping is because, again, extenuating circumstances, geopolitical issues, etc., economic issues like the Fed putting out their decision about rates at 2 o'clock today. Interesting. Didn't realize that was today until now. 2 o'clock today, those type of extenuating circumstances can obviously change the results, the favorable headwinds we've experienced so far. As long as we continue in this trajectory, though, we may have found our bottom. And that's fantastic. However, what we're going to talk about a little bit today is I'm going to show you the trends, number one. Number two, we're going to talk about the contrast between, or the dichotomy between this single-family home market and the condo market. Because, yes, the single-family home market has started to show signs of improvement. The condo market has to some degree. However, it's still a buyer's market for condos, whereas we've entered slight seller's market territory for single-family homes in most of our service area. Pause, intentional pause, just because the market starts to improve, meaning sales go up, contracts pending go up, inventory goes down, days on market start to go down. It does not mean that the value of your home immediately bounces back up. We have to skip along the bottom, just like values when the housing market started to correct. Inventory was climbing, sales were down, et cetera, et cetera. The value of your home didn't fall immediately. It doesn't go back up immediately. Changes in value tend to take anywhere between 12 to 18 months. Now, you will see the average sales price titrate up slowly because it has. Over the past few months, the average sales price has gone up slightly. However, it's not tangible enough yet that values have gone up tremendously. Changes month to month in the average sales price can be indicative of more expensive homes selling. And we know that to be true because the affluent or the luxury market, those buyers and sellers have not been as adversely impacted by the issues with the economy as on the whole, they're flush with cash, and interest rates don't impact them as significantly as they do the average buyer. So it's not uncommon when you see markets start to skip along the bottom, the average sales price go up in an unequal correlation, because that's when more affluent buyers flush with cash enter the market and start buying up more expensive properties that may be discounted because we've been declining. Hopefully that makes a lot of sense. If it doesn't, just replay this a few times. The short of it is, the values will go up with time. They just might not be going up that quickly right now, depending on your area. So let's take a quick look at the local weather forecast. If you get that joke, you're a friend of mine. If not, that's okay too. We're still friends. All right, so here's what we're looking at, guys. Folks, here's what we're looking at, folks. So we've got here the average, or not the average. This is the single family home market in our entire service area. The only area that I left out or omitted from this chart is DeSoto County. DeSoto County always skews the data, always, because there are so few sales that take place there. One month there could be 0, the next month there could be 100. So it literally looks like ski slopes up and down. It looks like mountain peaks. It's insane. So we omit that when we look at the overall trend. And from this same time last year, you'll see in the lion's share of the Florida Gulf Coast, we've got inventory down by 11.7%. Fantastic. Anything less is more, meaning any less inventory is better. For home sellers, that is. For buyers, guys, this is the sign that we're skipping along the bottom. Might be time to get your act together, because you can only set the sales price once, and they might start going back up in the next year. And even if interest rates do go down, if they do at all, you're going to be paying more for the same home that you could buy now. And if rates go down, you could refinance, because eventually they will go down. It's just a question of when and how much. But you only get to set that sales price once, baby. That's for sure. All right. Inventory's down by 11.7%. Sales are up by 4%. Contracts pending are up by 10%. So we got 4% more selling from last year to this year. And we got 10% more going to contracts. So what does that mean? Buyers are in the marketplace. There's always homes that sell. Always buyers buy. Always buyers buying. It's just a question of how many and for what price. Fast forward. Days on market, average list price versus sales price. You'll see here the average list price versus sales price in the greater Tampa Bay area, Florida Gulf Coast, was averaging about 92% of what you were listed for when properly positioned. You'll see that the average days on market in the entirety of the Florida Gulf Coast and our service area was 88 at its peak. And since we have seen inventory decline and sales pick up, the average days on market are subtly declining. That's fantastic. The average days on market, however, are still up 8.2% from last year. Okay. So we need to be vigilant of what inventory is doing, what sales are doing, and what contracts are doing. If those continue to converge, meaning inventory is coming down and sales are coming up, if they continue to converge and not diverge, start going apart, then we'll see the average days on market continue to go down. So this is good news. And the average sales price, list price versus sales price when properly positioned, is 93%. So we're seeing that number come back up as well. Now, what does that mean for average sales prices and list prices, et cetera, et cetera, et cetera? A lot of S's today. Well, see what happens when the housing market starts to improve. The second it starts to improve, you get realtors that start to tell people whatever they want to hear, and then you get sellers that smoke hopium. Hopium is the deadliest drug in the real estate world. So you see the average list price bottomed out here at about 577. Again, I keep adding the disclaimer. This is the last time I'll do it for the Florida Gulf, our service area in the Florida Gulf Coast. And then as soon as inventory started to go down, what did they do? Oh, they start increasing what they list the home for, right? And now you're seeing that it's petering or tapering off. Peaked at 613 and now it's going back down. Why? Because they realized, oh shoot, the value of our home didn't go up overnight just because inventory went down. Silly me. Now you will see the average sales price is subtly starting to climb. And that could, until we see this continue, it could be linked to more expensive properties selling. Meaning the affluent buyers and sellers that are not rate sensitive, they're out buying up all the deals that values have been falling on for the past 4 years. They're capitalizing on the market. In the stock market, we talk about follow the money. That's like whales and institutional money. Follow the money. Same thing in the housing market. Follow the money. If affluent buyers and sellers are entering and scooping up these opportunities, that tells you we're probably bouncing along the bottom and it might be going up soon. You might want to get ahead of that, or at least start to strategize. What does this look like for us? Is it time for us to buy? If you've been sitting on the sidelines waiting for the bottom of the market, it might be here. And if you've been sitting on the sidelines waiting to sell, it might be time to start planning. Even if it's not today, because remember, values don't shoot up overnight. They tend to take 12 to 18 months before you see palpable, tangible change. It may be time to start planning. Do what you will with that. Last but not least, months of inventory. Anything less than a 5-month supply of inventory is a seller's market. However, when it enters into a seller's market, like we've seen since last year, now keep in mind, this is averaged out. There are some of the counties that we service, like Charlotte, Manatee, Sarasota. Those markets have had inventory levels, months of supply, that is, well in excess of 7 months. So this is just an averaging out. When you see it stay below a 5-month supply for a prolonged period of time, that's when values do start to go back up. As you'll see, we are just now starting to experience, on the whole, less than 5 months. And you'll see even here, when everything was averaged out, this is the scary thing. When everything is averaged out, we still had 6.6 months of inventory, which means we had some markets that were over a year's worth of inventory in our area. And a lot of homeowners got really frustrated around the beginning of the year and pulled their properties off the market because they were tired of getting the hell beat out of them. Values had been falling forever. I had a lot of clients that did that right here. Took their home off the market because they just got tired of getting beat up, which is a good thing. The less homes on the market, the less competition you have, the less choices buyers have, the sooner the market will begin to improve. Maybe we're learning. History doesn't always repeat itself, but it often rhymes. Now here we are, 3.9 months of inventory. As long as this trend continues, and continues for at least a year, under 5 months of inventory, this may be the beginning of the next boom, per se, when values go up. Something to be cognizant of, make plans for. Now, last thing we're going to do, we're going to look at condos. So remember, 3.9 months of inventory for single family homes, peaking at 6.6. This is the entirety of our service area. Let's look at condos now. Good Lord. How about that? Good golly, Miss Molly. It's like Matthew actually knows what he's talking about. A year's worth of inventory for condos on average. That means we probably had 2 or 3 years in certain areas. And we're still in a buyer's market for condos. Interesting how that works, isn't it? You would think that the whole market corrects ubiquitously, and at the same time, nope. They are completely independent. They are not interdependent of each other. Right now, you want a deal? Go buy a condo. There's only one problem though. When you buy that deal, you're going to be paying $1,000, $2,000, $3,000 a month just to live in the stupid thing. I like condos. I love condos. I was going to buy a condo. It was $1.9 million and the dues were $1,200 a month. It sold for $750,000 and the owner that sold it paid a special assessment of $250,000 for the buyer when they bought it. And the dues went from $1,200 a month to $2,400 a month. Condos left my buy box immediately then. All right, but here, in all seriousness, getting back to the soup to nuts of this, inventory still down for condos by 10%. So even the condo market is showing subtle signs of improvement, and even more not so subtle signs of improvement when you look at the sales and the contracts pending. Sales are up more than they are in the single family home market. So 10.4% inventory down. Sales are up by 24% and contracts are up by 31%. That means more buyers. Opportunities, guys. It's all about opportunities. Follow the money. People are seeing the opportunity, the discounted prices that these condos are sitting at, and they're acting on them. I don't blame them. If you've been waiting to buy a condo, might be time. The average sales price, remember, single-family homes were about 92 to 93%. Well, condos are selling for about 87 to 90% of their list price when properly positioned. And the days on market, we're in the 70s right now for single-family homes. It's still over 100 for condos. Why? There's too many condos for sale. There's too many properties available. So the correction will still continue, meaning the negative correction, value loss, will still continue for now, at least for the foreseeable future with condos. Whereas, the condo market is still doing this. It's still declining. Whereas the single family home market is skipping like a rock on the lake. We might have found bottom. Now, here's the funny thing. Remember how I said more affluent property owners and buyers are transacting because of the potential bottom of the market? Nothing says that more loudly than this number right here. When the average sales price for condos goes from $357 to $655 and then back down to the mid fours, what that says is there's a lot of high net worth individuals that are out there snatching up these condos that are available, and very expensive condos. And we did see that. Pinellas, Tampa, some in Sarasota, there were condos in excess of $7 million that transacted right around this time, the beginning of the year. So that's why that number is so skewed. It doesn't mean your condo value went up by 100% overnight. Nope, not what that meant. The one that's been on the market for a year listed for $7 million finally sold. Or new construction. A lot of new construction in St. Petersburg, in Tampa. There's some high-rise condos that have been being built forever and ever. Amen. Those are closing now, and that throws off the numbers. All right. So you can see here, the average sales price for condos, what was it doing, though, up till that point? It was going down from $421 to $357. So it's, again, like Matthew almost knows what he's talking about. I might listen to him every once in a while. Values in the condo market were still correcting. And last but not least, like we talked about, buyer's market. Still a buyer's market. You want a deal? Go buy a condo, as long as you can pay for the monthly dues, because it's going to be more than the mortgage payment in most cases. So, guys, good news, not so good news, good, bad, and different. Who knows? It would appear at the moment, though, that the market is starting to show favorable signs of change. So if you're a buyer that's been waiting on the sidelines, now might be the time to start dipping your toes in the water. Because for single-family homes, we might have found the bottom, and values may be going up. And rates actually may be going up this year. If they do, though, it really doesn't matter what rates do, as long as you're not over leveraging. Rates are only a problem if you can't afford the home, but you only get to set the value once. So right now, properties are on sale for all intents and purposes. This might be the last time you see them on sale for a few years. History doesn't always repeat itself, but it often rhymes. Values are going to go up and down. Right now, they're down. Who's to say you buy now, as long as you can afford it? Don't over leverage. That's the problem. The whole rates conversation is a lie. Yes, they're higher. However, rates don't matter if you can afford and don't over leverage. Buy now, because we may be at the bottom. I'm not telling you what to do, just something to consider. Homes are on sale right now. Builders are still offering incentives. It may behoove you to buy now, and then if rates do go down in the future, you could afford it now. You can afford it even more then if you refinance. And guess what? When rates go down and the values start to climb, you don't have to lock in a higher sales price like everybody else right now that's handcuffed to their 3% interest rate on a home that they can't sell for what they bought it for. $1 million home they're handcuffed to because they can't even sell it for $700 right now. But I got a good rate, so it's a great deal, right? It's the silliest thing in the world. All right, guys, hopefully you learned something from today's video. I hope you have an amazing rest of your July. We're in August. We got 4 months left, guys. Make it an amazing 4 months. As always, when you have questions, buying, selling, investing, and even in the stock market, real estate, whatever it is, I'm here to help. I want to be your resource of choice. Call me, text me, send me a smoke signal. Phone's on, doors open. Here to help. See ya.